Bam! There he is.
Here we are.
Eric Lovett, how you doing, man?
Good to see you again.
E-Love. This is episode 1 of House Money, which
Okay.
is where I rap with some of my best friends in the mortgage industry like yourself about what's going on in the real estate space, the mortgage space, and in some cases the prize fighting space.
Right.
This weekend, Mayweather McGregor. Yeah. Did you check it out?
I did. I went to a friend's house and we watched it. I kind of went the way I thought it was going to go. I thought it was going to end 1 round earlier. In fact, I think I called it 9 rounds and a TKO. But
Yeah.
you know,
Early stoppage, anyone?
probably. But it's better for McGregor that I got stopped early. You know, if he'd have gotten hurt, then he wouldn't be able to fight in the UFC for X number of months,
Yeah.
right? So if you get a concussion, now you're out and you're suspended for so long, or he breaks a bone, then he can't fight for however long. And I don't think he really cares necessarily. He got a big payday, so.
That was the funny thing was my daughter was like, she's like, wait a minute, because she thought that whoever won got the money. She thought there was like a
right.
bag of money they were fighting for. Like,
Well, that's probably how it used to be.
I was like, you know what, that is a great idea. That's how it should be. Because she was like, so wait a minute, you mean they both make lots of money, and so they're only fighting to see who wins and also makes a lot of money?
Right.
I was like, dang, she's onto something. Kids say the darndest thing. She's 10 years old, and she figured out this is a hoax, like in no time.
Right.
Once
Well, it was a big marketing ploy is what it was. I mean, but, you know, it was fine. McGregor couldn't lose. Look at it this way. No one expected him to win. He did well, meaning that he didn't embarrass himself. He got a big fat paycheck, and he still lost. So where did he lose? Only he's got a 0-1 boxing record. Other than that, who cares? He got a big fat payday, and it's a payday you never would have gotten in the UFC. So good for him.
Yeah, good for him. I mean, I would like to see the fight go to the finish, just because some people were talking about some different things with Mayweather and his whole turn the back thing and all that stuff. And the people in the boxing world, the boxing purists, they call that good defense.
Right.
People in the MMA community call that super weak.
Right.
And there was sort of this big MMA boxing thing. For me, the only thing that was really proven here was that a UFC fighter who's never been in the boxing ring before can hang with the best of all time for 10 rounds or 9+ rounds. Just kind of shows you that the dramatic difference between the two sports, in that you could take any boxer you want, put him in the cage with a UFC fighter, and in 60 seconds tops. They definitely don't make it.
There's been a couple of people that tried and it didn't go well.
Yeah.
It's a different sport. I mean, altogether. And Mayweather plays to the boxing rules, and McGregor had to force himself to the boxing rules, and so it's unnatural for him. Mm-hmm. He's been a MMA fighter for so long. You could see that he was a hammer fist, and he was trying to hold the guy. You just couldn't do it. But
yeah. It's a natural reaction in MMA when you get hit to go for the takedown.
Yep.
If you get hit or stunned or something like that, because that's typically if the guy just hits you, he's off balance, or he's at least open for the takedown. Yeah. So it was an interesting thing all in all, but there's a lot of money involved, and this show is about house money. Right. So when we say house money, we're talking about
buy a lot of houses with that money.
You can buy a lot of houses with that money. It's like winning the lottery.
Yeah, totally.
Literally.
A big lottery too, not a little lottery. Both of them.
Both lotteries.
Yeah.
It's true. I mean, like, even the Powerball starts at $40 million.
Right. That's
like
the taxes that McGregor's gonna have to pay.
Yeah, he's gonna have to pay more than that tax.
Right.
And Mayweather's gonna pay triple that in tax.
For sure.
For his payday. So, these guys make a lot of money. Right now the market, at least in San Diego, is doing really well. I can't speak for globally or even nationally, but it seems like pretty much everywhere is doing really well with real estate, which has caused a couple of really interesting things to take place. Mm-hmm. We have the great Zillow debate taking place here next week.
Can't wait.
Unbelievable what that's going to be. We'll have an in-studio audience. It's going to be crazy. But we've got that going on, and that's all about Zillow and their sort of shifting. Looks like
they're moving their way into the real estate business.
Dude.
All of Redfin.
Redfin just went public.
Mm-hmm.
And they've never made a profit as a company, but they've used their revenues to grow, and they've grown rapidly. So that stock got a decent multiple and is trading well. It's higher than it was at its IPO, actually by quite a bit. And then things changes in the mortgage industry. So all the regulation, essentially all of the fallout from the financial collapse, just landed right on top of the mortgage industry, right?
For sure, absolutely.
Changed everything.
Yep.
In my days in the mortgage industry, it was the cowboy era. I mean, you could go and start a mortgage company, get an LLC, and boom, you were off to the races.
Right.
You could fund loans a lot of different ways. That's not the case anymore.
No, unfortunately, that's not the case. And a lot of times, we talk to borrowers who get frustrated, as well they should. We get frustrated too because the documentation level it's so high in many cases, and they don't understand. Like, the rules are different now. Every little thing has to be documented. Large deposit, document it. What was it? Where did it come from? Show me a canceled check. I mean, it's ridiculous, but that's the rules. And so what I tell them is...
Is it helpful, do you think?
Probably on the margins. What I tell the borrowers is, this is the way it is. Okay? I don't make the rules. You don't make the rules. The government and the banks have made the rules. And now if you want the money, we have to follow the rules. So the rules are simple, step by step by step. It's a pain in the butt, no question about it. It sucks. And nobody has any fun. The loan business is not fun like it used to be fun. Now it's tedious, and you have to go through every little thing all the time to make sure you didn't miss something. And explain that address. You had an address 6 months ago. What is that all about? I need you to write an explanation. It better be a good one, or else I can't give you the money. It's that kind of stupidity. But that's what it is, and that's the way. The rules are the rules are the rules. Follow the rules, you get the money. Don't follow the rules, you can't have the money.
I mean, do you think that it was successful? In other words, all of this stuff that landed on the mortgage industry, was it successful in preventing, the fraud and the things like that happened in the past that it was intended for?
Well, I think to some degree it did, and what it did is it chased a lot of the dirty mortgage guys out, because it's a hassle now. Now, if you're going to do a loan, you can't commit fraud. It's too easy to get caught. With the advent of scanners and all the other stuff, you could make up documents back in the day when you were talking about the early 2000s.
Oh, yeah.
And no one would know. But now, you pull the tax returns from the IRS transcripts, and they match them against what you submitted, and they better match, because if they don't, there's going to be a problem.
Yeah, there's a lot of checks and balances now, which is good.
I agree.
I remember managing loan officers in the early 2000s, and one of the things that I did and that I had my assistant do on a regular basis was go through their desks to make sure they didn't have any whiteout.
Yeah.
Do you remember that?
Whiteout.
There's that whiteout, not the whiteout with the, with the little paintbrush.
No, you need the tape.
The tape whiteout. Yeah. If somebody had that, then you knew something was fishy, because there was no reason to have it. No reason. Now,
there's no reason to have scissors either. So, just for the record, there's no reason to have scissors either.
So there was some stuff going on, and I mean, even though I was very much on top of my people, because I was responsible for it all, there was still stuff going on, and I heard rumors and things, and people would change stuff because you had all these weird programs, which we don't have those anymore. So I kind of feel like just getting rid of the junky programs was all that really was needed.
Right. Well, yeah, I think to some degree that's the case. But what chased them out was the low rates. I mean, think about it now. These are basically private party money. It's not government money. And so you're asking now, current rates are 3.875%, 4% on a 30-year fix for regular old vanilla loan. How many people do you know want to lend their money out for 30 years at 4%? I don't know any. And so consequently, all those lenders who are around doing the funky stuff went away. And now they're starting to come back in. There's some programs that you can have stated income, kind of stated, bank statements, and some of the funky stuff, but it's a much lower loan to value, so that if there's a problem, they can come and get the house. They're not going to lose their money.
That I understand.
Right. See, back in the day, you could be a day out of bankruptcy and I can get you 100% financing.
That's ridiculous.
It is.
But anybody, I'll loan you the money if it's 75% LTV.
Right.
But if you're getting an FHA loan at 95%,
right,
at 4.5% or 4% interest, I wouldn't loan you my money.
No. Why would you?
No, I wouldn't. So I mean, I always thought that was the solution, was just make lower LTVs, make people put down bigger down payments. But then you hear everyone say, oh, well, people can't afford that. Well, if they can't afford the down payment, if they can't save enough money for the down payment, maybe they're not ready to own a home.
That's a legitimate argument in places like San Diego that it might be unrealistic. And what I mean by that is that you're talking about your average purchase price being somewhere in the $500,000 range. So you're going to come up with $100,000 to buy a house,
right? And
that's going to be difficult for most people, even people who make a lot of money. That's difficult. And so consequently, there's a bunch of programs out. They have a bunch of first-time homebuyer programs that you can get actually with zero down, now. I don't know if you've been following any of this, but there's a couple of big programs that we use. First-time home buyers, and you don't even have to be a first-time home buyer for some of them, but you can get a grant up to 5% of the loan amount, or you can get 2 additional liens that go up to about 7% of the loan amount. So you could literally come in with very little money out of pocket. Credit has to be pretty good. It doesn't have to be perfect, but the debt ratios are hard. I mean, it's like boom, 45, that's it. 45.1 and you're out. It's that tight, and they have income restrictions. But I find a lot of people will qualify for them, and I do a good bit of those loans now, and that's how people are getting into the market. In an FHA, is a great program. If you have 3.5%. Good, bring it.
Yeah, get it done.
Yeah, it's
all
easy.
Day.
Yeah, and that's you have wide spreads on debt ratios on FHA.
That's the one thing that I've never understood, though. I mean, just the way the qualification process is done, looking at the credit report, and there's very little investigation really done about other debts and things like that, like people who have their kids in private school or after-school care, or how much is the heating bill for the pool.
But I think much of that is discretionary, right? Things go bad, you can pull your kid out of private school and send them to public school. It's not what you want to do, but it's a discretionary. It's like a loan on your 401k. It shows up as a payment out of your pay stub, but ultimately you're paying yourself back. You can just call them and say, I'm not paying this anymore, and they'll stop taking it. So I can see some of the reason that they do it that way, but it's trying to get somebody qualified these days is not as easy as it used to be by a long shot. In fact, it's difficult. And we talked a little bit about documentation, but there's not a lot of outlets. It's like, look, if you can't prove your income, you got to come up with 30%, and you're going to pay through the nose when it comes to interest rates. That's just the way it is. It's going to be almost double what a current rate's going to be.
And by the way, if you don't need a loan and you pay in cash, you don't have to worry about any of that, right?
That's true. Yeah, write a check all the day.
Exactly. Well, I will say one thing though. Like, as we get to the Redfin discussion, I want to pull up the website, because I think that what's really interesting, and I'll be honest with you, I like Redfin's technology. A lot of people in the real estate industry hate it when I say good things about Redfin, but the truth is that their website is like amazing. It's really helpful, and there's certain things that you can see. So website, I'm just looking up San Diego in general. What you'll find is they have this hot home feature. The hot home feature, it's their own algorithm, so it's not some preset thing, but if people are looking at a house in great numbers comparison to other homes, they're able to figure out that this home is going to sell pretty fast.
Right.
The hot home feature, right? This thing, if you look now, this actually gives you a really good look. So this first one here, that's a Redfin listing. Let's see, do we have this pulled up yet?
I can't hear you guys if it's up.
Oh, is that how it is? Gotcha. Okay. So anyway, so the Redfin hot home feature helps you determine if there's a lot of people looking at certain homes. One of the things I've noticed recently is that there are a lot less hot homes.
Oh, interesting.
A lot less hot homes on Redfin. Now, that could mean that people who are in the market have figured out what it is that they're looking for, or what it is they're not looking for. Or it could mean that there's a macro issue. What say you?
I don't know. That's a good question. And part of the thing in San Diego in particular is the inventory is low, so the prices are high. And that could be part of the problem too, as the prices start to move up, people start to freak out a little bit. And it's 500 grand's no joke when you're buying a house. And I know for San Diego it doesn't sound like a lot, because you have so many houses, just regular homes that are $600,000-$700,000. Other parts of the country, it's astronomical. $500,000 buys you a mansion in most places.
Right.
And so I think that probably people get a little leery once you cross the $500,000 threshold. And it's like, okay, well, we talked about a down payment. I could put down this much. Do I really want to pay mortgage insurance? And that adds a lot of money to the bottom line. The other thing is that people always forget. One of the consistent questions I have, especially for first-time home buyers, is they always forget to add to their taxes. The taxes are significant. You have $1,000,000. It's about $7,500 a year in taxes, and you break that up over a month. And that buys that. You think you can afford $700,000? No, guess what? You can afford $600,000 because you forgot to add the tax.
Yeah, because if
it's a big difference.
I mean, if it's $6,000 a year,
That's 650. Yeah, $500. So 700. You're about 650, $700 a month. It's a lot of money.
Yeah, that's significant.
Yeah, and you just don't realize it. And then if you have mortgage insurance, depending on how much you put down or what or Melrose, and all those things add up. And you buy some places in the North County that have Melrose and HOA, you could be spending $1,000 with your taxes just in stuff that just to have the privilege of owning a house. It's $1,000 a month coming out of your pocket.
One of the things I do like, while we're on the Redfin subject, is that they do sort of give you, in my opinion, a better payment estimate.
Oh, that's good.
Because they show the property taxes on there. So the payment calculator will estimate principal and interest, property taxes, and homeowners insurance. Whereas like the Zillow doesn't do that.
Right.
But that's the sort of the big difference between the two. Like one has, in my opinion, Redfin is more designed to give you really valuable information if you're on there. They just want to give you for example, they'll actually show you the Zestimate too if you want to look at the different home valuations. On Redfin, it shows you the Zestimate, it shows you the Realtor.com estimate, and it shows you their estimate of the value.
No kidding.
That's tremendously more valuable to me, whereas Zillow is definitely a lead generation tool, and they're really just trying to get as many people to fill out forms on their website as possible. Where I understand the value in that in the marketplace, and so I'm not going to have a Zillow debate here because that's next week on Thursday. But to me, Redfin's dramatically more valuable because of that. Mm-hmm. Some people don't like it because they're a brokerage,
right?
And they feel like there's some sort of...
And they're kicking back money to the borrowers.
Yeah, there's potential conflicts there. But in general, I mean, I think something like this, having a technology like this, is ultimately good for the industry and good for buyers too, because it makes it more efficient for them to look at homes.
Well, that and the more information the buyer has when they're looking at houses, the better off they are. And that's the fact that they try to estimate taxes, HOA, and all that kind of stuff that goes into the payments makes a big difference because you're not looking at houses you can't afford now. Where in Zillow, you look at a house, look at this estimate, may or may not be correct, much like Redfin. I mean, who knows where the number came from. But the fact of the matter is, if you are talking about things that you need to know you have to pay property taxes, and they're significant. And if there's Melrose, you need to know that too. And it seems to me that, from what I understand, I don't spend a lot of time on either one of the sites, is that Zillow kind of came on and innovated, and then Redfin came on and tweaked it and made it better.
Yeah,
that's kind of how I see it. And it's at least better for the borrower or the potential buyer, whereas Zillow is probably more geared toward agents and marketing.
Definitely geared more toward agents. Or, they also have mortgage advertisers on there too. So it's not just agents, they have mortgage advertisers.
Yep.
But for the most part, it's a lead generation tool for agents.
Correct.
There's thousands of agents on there advertising.
Mm-hmm. And for some people it works great.
Yeah.
And some people it doesn't. It just depends.
Let me ask you this question, Eric. Let's say you're today we anoint you the CEO of Zillow. Mm-hmm. What's the first move? Do you make it a brokerage?
I don't think so. I think you open a big can of worms with that. I really do. I think that you wind it with some liability that you, at least if I'm the CEO, I'll be talking to a lot of attorneys because the liability is going to be, is unknown to me. But it seems to me like if you are going to be a brokerage and you're going to have all these states and you've got to have liability in there somewhere, right? It's going to be a problem. Now, maybe Redfin's figured it out. Maybe they haven't. Wait till the CFPB gets their hands on them, because that's essentially sooner or later what happens is the CFPB starts sniffing around stuff and they find things that are wrong, and fines start flying and lawsuits, and then you'll know what the liability is. In terms of Zillow, I mean, last I checked, their stock's doing pretty well too. They're making money, and I don't know that Redfin is. I think Zillow's making money, isn't it?
Definitely.
Yeah. So I don't know. It depends. You want a business model that makes money, or do you want one that looks cool? I don't know. That's the thing. And
that is the question.
But I've done advertising on Zillow before. In full disclosure, I've had limited success. I have a friend of mine in Washington State that has a lot of agents that he works with on Zillow, and he's crushing it. It just depends on, I think, the zip codes and where in the country you are as to how effective it is.
Yeah, 100%. I mean, I think it makes sense. I do think they will become a brokerage.
Probably right.
I mean, I think they need to, just so they can have the better data. I mean, the data that Redfin has is superior to Zillow. It is. The Zillow data, you find holes in it all the time.
Right.
All the time, holes in it. Like, this house isn't for sale anymore.
Right.
So if you really want accurate data, you have to go to Redfin. But there's some bells and whistles. The look of Zillow's cool. It's cool. There's some neat things about it, and people feel safe there. You know, there's a lot of information there. People feel safe about it. But there's been some issues too with Zillow and the schools. You know, they're not necessarily showing you the schools that are in your district when you look at a house. They're showing you the closest schools, and sometimes that's not the school that's in your district.
Right.
And
Which
they're
could
just
be
kind of
problematic.
they're just kind of about it. Like, that's a big deal.
Right.
You know, fix that. Whereas you won't find that kind of issue on Redfin. So I think that to compete, if it's really going to be a Zillow versus Redfin, because that's really the future of real estate is technology, right?
Right.
I mean, this is like the one industry that hasn't really evolved a ton with technology. I mean, we have DocuSign now.
Right, which is huge.
No more scanners, no more fax machines.
Right.
But
no carbon paper.
You went way back now.
Yeah.
None of that anymore. But that's it. Like, really, the only other thing that's happened is that the information to see homes that are for sale is now available and readily and easily.
Right.
And that's great. But the actual process hasn't changed much as far as executing it, as far as, you know, the business model around it. Redfin's the first one to really come in and switch that up. Like, Zillow doesn't promote a different business model. They're really a lead generation engine. And the technology that they have is really just for also searching homes online, pretty much. It's researching homes online. So we haven't seen a huge step forward in that regard. I do feel that it's coming, though. I feel like there's going to be a real estate app that comes in the next, 5 years that just blows the doors off everything. And you're gonna be able to execute everything from your phone. I think they're gonna be able to get your real estate deal done on your phone. You're not gonna be able to get your financing on your phone, but I think you'll be able to do the paperwork.
Well, you can almost get it on your phone these days anyway.
Pretty much.
Yeah. But the real question is, are you buying a house without an agent? You know, that's really what it comes down to. It wasn't so long ago that you had to be an attorney to sell a house, and that's why they changed the rules and made real estate brokers. So you didn't have to be an attorney, but you could go through the following things and learn what you need to learn, and then you can negotiate on behalf of a buyer or a seller, whatever the case may be. So the question becomes, do you use an agent or not? Is an agent worth the money? And frankly, I think they are. Mm-hmm. I know it's I've gone back and forth. There are times in the real estate just in the past 20 years you kind of wonder, like, really, I could put this on market, it'll be sold in a day. Do I really need to pay an agent for that? Well, yeah, once you've done it a few times and you know what's going on, there's liability in it. And what happens is the agent tells you, hey, you got to fix that. You got to do this. Don't do this. Da, da, da. Mm-hmm. Make sure that you've got it all together so if something happens after you sell it, you're not coming back to you.
And it's a marketplace. And ultimately, right. You have to, you create your own little shop where your house is for sale, right?
Right.
The agents do that. They do it with videos and professional photography and word of mouth and sending, like you see the posts on Facebook all the time.
Open houses and they're
open houses.
Yeah.
So you have to create your own market
right.
for every property, and I think you do need an agent to do that. The question is this: if agents didn't exist, let's say people were just buying and selling houses person to person,
right?
Would that reduce prices by the traditional commission of 6%, or would the prices be the same?
I think it'd be the same.
They'd probably be the same.
Yeah.
So I don't think that you can make that argument about it. The other question is, if there were no agents and we were just selling homes between individuals, would there be more liability issues as a result of that, or would the liability issues be approximately the same? And that would be the only thing you'd have to solve for in that scenario. And there'd probably be companies that will come up with insurance policies, errors and omissions.
Yeah, at some point it'd be negligible.
Yeah, where you'd say, okay, well I have to pay $2,000, but that covers me in case anything goes wrong or whatever. And so you'd have to pay a fat insurance premium to cover that. But then you'd be covered. So do those two things play long run on something like that? And if they don't, when is the adoption phase for that new way of doing things? I think you're always going to find that people want to have someone else deal with it because it is such a big headache. There's so many moving parts, so much paperwork and all that. Most people are going to say, oh, yeah, I'm not doing all that.
Right.
I don't have time for that. I got kids, we got baseball, we got this, we got that. I don't have time to take on this whole project. I mean, how many times do people not even do the landscaping because it's going to take too long and it's too big of a project?
Right.
And we're talking about, the sale of a home is tough. You got to answer the phone, let people in.
Besides which, the agents will come in and tell you what's wrong with your house. If you want to sell it fast, paint this wall a different color. This is horrible. You know what I mean? They go through the whole process of letting you know you want max money for your house. These are the things you have to do. And you're not going to get the reason why the walls color is the way it is because you painted it that way X number of years ago. You never changed it, and so sometimes that color will turn somebody off, and so consequently you eliminate X buyer, right? So those are little expertise things that if you're a homeowner you probably don't have, or else you wouldn't have your wall that color. You know,
you actually make a good point for people who want to figure out whether they should invest in certain changes in their home or certain improvements. Call your agent. Call the person you bought the house from,
right,
and ask them, say, hey, if we were going to put this on the market, what would you have me do? Or would you say it'd be a good idea for me to do this, that? Because a lot of times people go and spend 10, 20 grand on stuff in the house.
Stuff that doesn't matter.
Just completely flatlined, the value. It just like didn't move,
Right.
It's like, well, we got a new gate,
Yeah,
like,
good for you.
I hope you get good pictures with it, because there's certain things that just do not add to the value of the home. They're aesthetic issues that you may feel better about, but they're not going to add value to the home. So would you still do it if you knew that ahead of time?
Right.
Because the traditional math is, well, my house worth $600 today, we're going to put 20 in it, so it's worth $620 now.
Right.
That doesn't work.
No.
Never has.
Right.
So I do think there's some value in that regard too. And keep in mind, I'm definitely not a proponent of for sale by owner.
Right.
I highly
talk about opening a can of worms. Yeah.
don't do it. So all I can say is don't do it. If you talk about all the horror stories I've ever heard and ever seen, in all my time doing this stuff on radio and television and Facebook, the worst stories I've ever seen, meaning the most horrendous, took years to fix things, were from for sale by owner situations.
Yeah, and I think that most of the people that try for sale by owner wind up using an agent anyway.
That's a fact,
I think that it is a fact. And so, you know what? On the margins, you might save a couple of bucks, but the fact of the matter is, the brain damage is going to be heavy, and you might as well just pay it and be done with it if you're going to sell your house.
I think so, because once you list for sale by owner, everybody wants a discount anyway.
Yep.
They know you're skipping the commissions. It's not a secret. They know there's no agent involved. You'd be better off, if you're really tight on something, to go and try to find an agent who you can work a deal with. That's a really smart, savvy piece of advice. Be like, you know what, I'm really tight on this deal. We just bought it 2 years ago. I don't think it's gone off that much.
Right.
We
don't really want to write a check to get rid of it.
Yeah, can you go call some agents and tell them to shoot them straight? Just be like, hey, I want to try to break even on this. Like, is there any way that we can work out something? You might find an agent who says, you know what, I think we can get a lot of buyers to an open house. I'll make my money that way on this one.
Right.
Give me the listing. Let's go.
Right.
I'm not going to do any crazy photography or drone videos or anything.
Not spending a bunch of money on it.
But I'll do it for whatever,
Right.
and we'll figure that out. You might find that agent, who wants that listing because it's in their farm and they want to put their sign up and they want
Right.
to do the open house, and you might be able to figure that out. And it's possible. I'm not saying you'll be able to, but try that first.
Right.
Before you say, well, let me just stick the for sale by owner sign from
See what
Walmart
happens.
in the yard. With my phone number on it. Wait until you see what happens. First of all, you'll get 100 calls from real estate agents
Right.
every day.
Yep.
That's the first thing that'll happen. The second thing that'll happen is you'll get calls from investors who are going to want to lowball you.
Right.
But they're going to be like interviewing you about the thing. Like, tell me about the house. And you're going to think it's an actual buyer. No. You'll find out later it's an investor. They'll
Right.
ask you how much you own it and stuff like that. So you will immediately be time sucked into oblivion by just opening this can of worms. And by the way, at that point, you still haven't shown the house to an actual legit buyer yet.
Right. And then you don't even know if the legit buyer is qualified.
Then you have to become an agent now, and
Right.
you have to play all those roles and figure out, like, all right, this guy's interested. Now what? Do I send him paperwork? Does he send me paperwork?
Right.
Like, what happens?
What do I
next?
have to fill out?
Yeah.
Because you don't know anything.
Yeah.
And
Oh,
you
we
can
found
get
the
some
buyer.
stuff on the internet, but it's not really. There's so many holes in it. Any lawyer will just tear it to shreds.
Yeah. So it gets really complicated. So I think the future of real estate does include real estate agents. I just think technology does step in and start playing a really big role, a bigger role than it even is now. And I think that has to do with paperwork. I think that has to do maybe even in the financing space. There's some really cool technology some of the companies are coming up with now that help facilitate the process of the loan, that make it easier for the borrowers to get documentation to their loan officers. That stuff is out there now. It's happening. And I think that stuff's really helpful for the industry.
I think so too. It makes things a lot easier, and some of the software you're talking about we use as well. And what happens is it sends you a list. These are the things we need. You can upload them. Click on this link and just upload, and then we have everything.
Yeah.
And it's simple rather than and it's secure. So it's like, okay, you're gonna fax it to me. Well, it could be floating around the office. Someone took it off the fax machine, or I printed it, didn't get to it right away. It's a problem. You sent it to the wrong number. I mean, who knows where it goes? But that's the thing, is you have a secure link. It comes right in, off to your file direct. You don't even have to worry about it. It's just sitting there, so you can't even mix it up.
Super easy these days. Yeah, take
absolutely.
a picture with your phone, upload it.
Yeah, that's the thing. You take a picture of your phone and upload it. It doesn't suck.
I know, it's awesome. So it's getting there. It's getting there.
Yeah.
I think we'll see more in the mortgage space as well.
It'd be nice to get some DocuSign stuff. Instead of, we now would use disclosures DocuSign, right? But it'd be nice to actually do loan docs DocuSign. That would be kind of cool.
So that's not happening?
No.
That's
at least not in my world.
Yeah.
Maybe there's somebody, some big huge company that I won't mention might be trying to play around with it. But no, we don't do that. And you have a notary, you have all there's
Physical.
other considerations, obviously. But it'd be nice to be able to, here's all the stuff, take the deed to Johnny down the street and get it notarized. But I'm sure you got title issues and all kinds of stuff and whatever.
Yeah.
But it would be cool. It would be cool.
I feel like that's coming.
At some point, I think it will too.
I think that's coming, one way or the other. Well, great stuff. Eric Lovett. Episode 1 of House Money is coming to an end. I appreciate your time, my friend.
Yep, no worries.
Great to
Thanks
see
for
you.
coming.
Absolutely. All right, that's it for this episode. We'll obviously be doing this again. Eric Vaca, we see you. Rates are low, on fire. That's right, on fleek. Peace.